Hello traders and welcome to another video review. Today is Friday, April 21st, 2023. Let's take a look at the Forex calendar today. Looks like a kind of a busy day, especially during the London session. We got plenty of data from the UK in form of the retail sales, and then in form of the composite PMI, manufacturing PMI, and services PMI. The retail sales are scheduled for release at 8 o'clock, and the forecast is that they will drop from 1.2% to minus 0.5%. The composite PMI and the manufacturing PMI together with the services PMI are scheduled for release at 10:30. German manufacturing PMI data are scheduled for release at 9:30 and are expected to increase from 44.7 to 45.7, so 1 whole point. During the New York session, we got one very important data to release. This data are from Canada and it's going to be released at 2:30. And those data are core retail sales. These retail sales again are expected to drop from 0.9% to minus 0.1%. So this is the situation on the Forex calendar today. It looks like that might be kind of a busy day for Friday. So please stay focused and stay vigilant. So we are going to take a look at the technical situation for today, and we are going to start with euro and then dollar and the other markets. So let me just switch to some charts. The British pound on the 4-hour chart, as you can see, is right now doing this wedge pattern. Okay, the blue one is the potential wedge pattern. As you can see, we've been trying to go up, but 1.2472 is the technical resistance. So it was tested 1, 2, 3 times before the recent down movement had occurred on the 4-hour chart. We are testing the lower wedge line. As you can see, there is some kind of a pin bar here. There's a pin bar here. So any breakout below the level of 1.2392 would mean that all of these attempts to move the prices higher has failed, and now with a breakout below 1.2392, the wave C is being, of course, developed. The target might be at 1.2344 or even at 1.2275. In that situation, the ABC corrective pattern should be done, should be developed, and the market would be ready for another wave to the upside. The momentum has been oscillating around the level of 50, going to 51, 55, but recently it's clear that the momentum is back below the level of 50 again, and it's, as you can see, poising to the downside. Okay, so it's pointing to the downside. It's skewed, biased to the downside. So we are now inside the negative zone, which means that the bears are in control of the British pound market, and if there's a breakout to the downside, this situation might get a little bit ugly. So please stay vigilant, especially after the data are released. That's the British pound. Let me take a look at the euro. So that's the euro dollar for our chart, and what do we have here? This big trend line here, as you can see, being tested many times, but now the market is still consolidating. It's still moving in a horizontal trend on the RSI around the level of 50, so neutral market here, and just below 1.0989. So this is the technical resistance, intraday technical resistance, and the general technical resistance, the nearest technical resistance for bulls, and the bulls and bears are apparently equally waiting for some kind of a breakout. The breakout might be to the upside, the breakout might be to the downside. However, we see the high at 1.1076, and then there is very nice impulsive breakout to the downside. Okay, this is the nice impulsive wave to the downside. then it looks like again some sort of the consolidation, some sort of the correction in another wave here. So that might be wave A, that might be wave B. So we are waiting for the wave C, and if the market breaks below this trend line and below the technical support at 1.0910, then of course the next target will be 1.0831. so ABC can be developed here. So that's the situation, which is the same as on the British pound, which might again suggest that the US dollar might be getting stronger across the board. Let's take a look at the Bitcoin. There you go. This is the Bitcoin 4-hour chart, and as you can see, all of the important technical supports located at 29,190, 28,937 had been violated, and the short-term trend line had been violated, and 61% of the Fibonacci retracement located at 28,253 had been violated as well. So it's clear that bears are in charge of this market. They are pushing the prices lower. Maybe the 78% of the Fibonacci retracement located at 27,493 might bring some kind of a pullback, but this is a weak Fibonacci retracement level, which means that the next target for the bears is this technical support located between 26,678 26,525. Even despite the fact that the market conditions are extremely oversold on the 4-hour chart, if there is a strong bearish pressure that breaks all of the important technical supports levels, all of the short-term trend line levels, that might indicate we might extend the drop even lower towards the technical support. And last but not least, let's take a look at some Ethereum market. As you can see, the Ethereum is doing exactly the same situation. After the 2045 level, the technical support level is violated. Very strong breakout on a 4-hour chart. We got the test of the very important technical support, but the bounce was very narrow. The pullback was very narrow. So we broke lower, and now we are continuing to move lower below 1942. This is the technical resistance right now for the Ethereum bulls. Next target 1856, 1827. Those are the levels which are very, very close to this very nice trend line, the dynamic trend line support that has started in the middle of the April this year. So please pay attention to the current development on the Ethereum, because the recent hard fork didn't actually help bulls to rally higher. It rallied from here, which is 1856 towards 2140 level, which is fine. Now all of these gains are lost. The market is doing very, very strong correction. It looks like the 1, 2, 3, 4, 5 wave correction to the downside, which means that would be wave A, then there will be wave B as a pullback, and then wave C to the downside in form of the zigzag 535 zigzag pattern, which is very unfortunate for all of the bulls, because that would mean as well that the correction might deepen, especially if this technical support at 1827 is violated. Momentum hits the extremely oversold market conditions, so some kind of a pullback is welcome after the wave 5 is completed, of course, but with that strong bearish pressure, it looks like we will develop much stronger correction of the recent rally than the just a regular pullback on the Ethereum market. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.